Big change in the share market. Now fraudulent companies will not be able to survive. Hello friends. Imagine, you invest your hard-earned money in the shares of a company. You hope that the company will perform well, and you will get better returns. But after a few months, the news comes that the company is caught in financial irregularities. The share price has fallen, and your money is lost. This situation is not only yours, but of millions of investors who become victims of fraud due to wrong reporting of companies and negligence in audit. Now, to deal with this problem, Securities and Exchange Board of India, SEBI, is going to make a historic change in the share market. Now companies will not be able to tamper with their financial reports, and the audit process will be made more stringent. This new rule will ensure transparency and protection of investors in the share market. Why did SEBI take this step? What will be its impact on companies, investors, and share market? Come, know the whole story of this change. But before that, if you are new to our channel, please do not forget to subscribe to the channel so that you get the update of our every new video first. So let's start today's discussion without any delay. First of all, let's know whether the audit process of companies is going to be more strict now, and what will be its effect on the corporate world. In view of the increasing financial fraud in the stock market, SEBI has decided to tighten the audit process of companies. Under this, the format of annual secretarial compliance report will be changed. Now listed companies will have to present their financial statements in a more transparent and detailed manner, so that investors can get a correct idea of the real position of the company. The main objective of this step is to ensure that companies do not make any kind of mistake in their balance sheets and financial statements, and whatever information is given is completely accurate and transparent. This will also ensure that the actual financial position of the companies is clear to the investors, and they can take their investment decisions without any confusion. Now let's know whether SEBI will keep a strict eye on auditors now, and what effect will it have on financial irregularities. SEBI is preparing to keep a strict watch not only on companies but also on their auditors. Till now, it has been seen many times that audit firms try to hide their actual financial position by colluding with companies. This situation becomes more serious when these audit firms help in hiding the financial irregularities of companies, thereby misleading the investors. SEBI has decided to make many changes in the audit process to eradicate this problem from the root. Now the process of appointment of auditors will be made more stringent. Their qualifications and experience will be strictly checked, so that no ineligible or suspicious person can perform this important responsibility. If an auditor is found involved in any kind of financial irregularities, he will be immediately blacklisted, and he will not be allowed to audit any listed company in future. Now let's know whether strict audit process will curb the arbitrariness of companies. So far, many companies used to give wrong information to investors by hiding their actual financial position. Companies used to manipulate the balance sheet to hide their losses and exaggerate their profits. Now, under the new rules of SEBI, companies will have to present all their financial information with transparency. SEBI will ensure that no company can give wrong or misleading information to mislead investors. For this, stock exchanges will also be instructed to take reports from companies as per the new guidelines, so that the financial position of the companies can be analyzed accurately and impartially. Now the question is, why did SEBI have to take this tough step? In the last few years, many big companies have committed financial frauds, causing huge losses to lakhs of investors. In many cases, these scams were exposed when investors filed complaints. But by then it was too late. Talking about some major scams: IAL and FS scam, DHFL scam, and Yes Bank crisis have been such cases in which companies deliberately manipulated their balance sheets and defrauded investors of thousands of crores of rupees. Such cases weakened the trust of investors and also raised questions on the credibility of the stock market. SEBI is now taking this big step to make the financial reporting system of companies more transparent and strict to prevent the recurrence of such incidents. Apart from this, small and middle-class investors will benefit the most from this decision of SEBI. Usually, big institutional investors have experts to analyze the financial position of companies. But small investors only have the information that companies give in their reports. Now, when the reporting of companies will be more transparent, investors will get accurate information and they will be able to take their investment decisions more wisely. This will give them better investment opportunities without any risk, and they will be able to avoid fraud. Now let's know what effect will the strict audit process have on the companies. The implementation of this new rule will benefit those companies which are already working with transparency. But for those companies which have been involved in financial manipulation, this will be a big setback. Now they will have to keep their financial records completely clean, and they may face legal action for giving incorrect information. Apart from this, companies which are working properly can take advantage of this change to win the trust of investors. This will increase the credibility of the companies and help them attract investment in the long term. This change by SEBI is expected to bring more stability in the Indian stock market. When the financial reporting of companies is more transparent, investors will not get shocks related to financial scams again and again. This will increase the confidence of investors in the stock market and ensure long-term stability of the market. Apart from this, it can also increase the number of new investors investing in the market, as they will now have more confidence in their investment. So friends, this new rule of SEBI can bring a revolutionary change in the Indian share market. This will make the auditing process of companies more transparent, and investors will get the correct information. This will not only strengthen the confidence of investors, but it will also be an important message for companies that now no financial irregularities will be tolerated. However, the real effect of this decision will be seen only when it is strictly implemented. If SEBI is able to implement these rules effectively, then this will not only make the Indian share market safe, but it can also become more attractive for global investors. If you like our content and want to make our efforts even stronger, you can support us through the QR code given in the video or the UPI ID given in the description. Your every small contribution is valuable to us and will inspire us to make even better and informative videos. Your support is our strength. Also, if this video taught you something new, or you felt that this information should reach others as well, then do not forget to like and share the video. If you have any questions or suggestions in mind, then do let us know in the comments. We look forward to answering your every question and listening to suggestions. And yes, if you want to stay updated with our every new video in the future, then subscribe to the channel and press the bell icon so that you get every new information first. GRT Business always strives to give you accurate and reliable information. Our news is obtained from various news agencies, public opinion, and public sources. We try our best to verify every report, but we are not responsible for any dispute or error. Our sole aim is to provide you with accurate and reliable information.